This video is going to be a lesson on the 200 exponential moving average. We're going to talk about what it is and why it's impactful to the market. And we're going to look at some examples currently of how the 200 moving average is affecting the markets that we are currently trading. So let's go ahead and get into it. The video or the thumbnail that you see, that is Bitcoin. And then, so we're going to do Bitcoin later in the video. First, we're going to start out with the weekly E-mini chart. So this is our weekly E-mini. We see the 200 moving average is far below. And really, I want to bring up this video because what the 200 moving average does is it acts as a strong form of support. Any moving average is going to act as support, whether you're doing a 20 or if someone trades with VWAP on their chart. I mean, it's all going to act as support, but the larger, the more bars that are in that moving average, then the more meaningful it's going to be, the more support and resistance it's going to give. So as we look back at the chart, when was the last time the market touched the 200 on the daily chart? It was right here, back in September and October of 2022. So on the daily chart, it's been since September 2022 that the market touched the 200 moving average. What happened after it touched it? Well, it acted as a pretty good form of support. The market did not. It bounced here. It went a little bit below the moving average, but it did not really break through. So it acted as support. Ever since then, market has not came back and tested the moving average. I might have said daily earlier. This is the weekly chart. So each bar is a week. So it's been since October, September of 2022 that the market touched it. And I bring that up as the first example because I just want to show how important this is to the market. Okay, so what I just did, I added more bars to my chart so I can look further back. And we look back to the COVID crash of 2020. We can see the market did break through that moving average, which is a rare thing to happen on the EMA weekly 200. But at first, we can see that it did bounce there. It bounced and actually had a 300 point rally after touching the moving average. And then it ended up breaking down below. But it was really a failed breakout of the moving average. It broke through and then pretty quickly reversed. And this is a V bottom. We have a V shape, quick sell off that is sharply reversed. Once it gets back up to the 200 moving average, instead of acting as resistance, it acts as support. So we break above it, and then we basically double bottom here at the 200 moving average. Then my market was basically straight up for a year and a half there before coming back and bouncing at the 200 moving average and then heading higher. All right, so anytime it touches the 200 moving average, it acts as a very strong piece of support. And historically, looking at this, whenever it touches it, we have a lot of runway for the bulls. A year or 2 years after, a lot of buying has happened after it touches the 200 moving average. And why is that? Well, one, because the 200 moving average, it's such a large moving average. It has so many bars in it. It's usually very far below where the price is. And looking at it now, the highs are 6,200, and the moving average is around 5,000. So that'd be a 16% pullback to test this, and that's where people tend to start buying. People are kind of always buying the S&P 500, but when it starts to get to that 10%, 15%, 20% pullback, some people will just automatically start putting some share of their cash to work in the market. So just naturally, I mean, if there's a big pullback, like 15% or more, then people will start buying around that number. And on top of that, then there's usually buyers as well at the 200 moving average. So right now, we're about 600 points above the 200 moving average. Do I know how we're going to get there? I have some ideas. I think we need to go sideways here for a bit. I think price needs to go sideways for a few weeks, and then this moving average will creep up a little bit more, and then maybe we have a second leg down off of this first leg. So I think that's a reasonable case, but how exactly does it do it? I don't know. And I don't think it's going to be this quick either. So leg one, pull back leg two. I don't think it's going to be this quick where we're there by April. I think we were going to have more sideways up here and hang out up here for a bit longer. And then there's probably going to be a pause here, and then we would have a second leg down. So I don't know how it's going to happen, but when it does, I'll be very vocal on this channel about, hey, we're getting close to that 200 moving average. It's something to watch out for, because we only hit it every couple years, 2022, and then back during the COVID crash. And before that, we had hit it a couple times here. We were kind of going sideways for a bit. But so over the next few months, we'll definitely keep an eye out on this 200 moving average. It's kind of a fun thing when it happens, because it rarely happens, and usually there are buyers at it. A lot of people are buying here. They're holding. They're getting ready to hold for another 5 years or 10 years. And like I said, just because you buy at the moving average doesn't mean you're going to make money immediately, but it's a good place to start putting some cash to work. Okay, so this is now the E-mini daily chart. So it's the same market. It's just the daily chart now. And I talk about this a lot on our daily reviews. I talk about where we are on the daily chart. Let me remove some of these and take a moment to look at the 200 moving average. Look at the times it's tested it and what has happened. Well, just from looking at the screen here, I can tell it's hit it about 5 or 6 times. And at least 4 of those have bounced. So bounce here, and then a 500, 400 point rally from there. Bounced here, 600 point rally after that. Bounced here, 300 point rally after that. Then also bounced here for a smaller, about 100 points. It broke through here, and then previously it did break through here, but then ended up reversing back up. And if you look over a longer time scale, like 20 years, 50 years, the market's going to spend most of the time doing something like this, where if it does break through, it doesn't spend too long below it, and then it ends up getting back above it and then bouncing at the 200. So long term, this is kind of the most likely case, where sometimes it does break through, but then it doesn't spend too long below it, and then it ends up bouncing. Now we're in this area where we're below the 200 moving average, and we can also see what we've had is a golden cross. A golden cross is when a 50 moving average crosses through a 200 moving average. So this isn't actually a golden cross because this is a 20 moving average, but it's kind of the same idea. It's implying that there's a trend shift. Now, I don't really worry about these crosses like this. I mean, I just look at what the price action's doing, and yes, we can see the market had a pretty sharp sell-off here. There's probably going to be a little bit more down, and that's kind of how I read it. So we might be spending some time below the moving average, the 200 moving average. Like I said, historically, we won't spend too much time below this moving average. It's usually either breaking through it, heading back above quickly, or it's just bouncing at it. So, I mean, nothing wrong with spending time below it. Sometimes markets need to readjust a little bit. The value of companies need a few months to catch up to their prices, and so that's okay. Nothing wrong with that. What'll be interesting is when the market comes back and touches the 200 moving average. And that's what I'm going to talk about a little bit later in the video with a different market. There are going to be a lot of eyes when the market touches this 200 moving average, because is it going to find resistance and continue lower, or is it going to break above and end up finding support like this scenario? Does it break above and then pull back and find support and even get a little double bottom? Right? This would be a bullish case. Bearish case is if we go up to the 200 moving average and then double top without being able to break through. Then that would be a more bearish case. So give it a couple more weeks, and a lot of eyes will be on that 200 moving average. And that's also kind of the point of the video, is because this is important. This is what this is what traders look at. This is what hedge funds look at. It's what retail traders look at. It's what people that are actually making money in the market, this is what they're doing. So, I want to make sure I bring it to your attention and kind of add it to your toolkit and give you another layer of depth in your analysis. Next chart is the gold chart, GC gold futures. This has been a while since we've touched the moving average on the daily chart. We haven't touched the moving average, the 200 moving average, since this time last year. So it's been a year. That's a pretty strong rally that gold's had. So to me, what does that mean? The first time it touches it, what's going to happen? When it's been a while since it's touched it, like in this case, that would increase the chances that there are buyers initially at that moving average, especially if there's a sharp sell-off. So gold's been rallying strongly here, but let's say it really starts to sell off, and we just in 10, 15 bars, we get down to the moving average. That'd be a pretty sharp sell-off. When you get that sharp sell-off, that increase in volatility, that usually means the market's going too far too quick. And what better place to find buyers when the market's going too far too quick than at the 200 moving average? So that increases the chances that if there's a sharp sell-off, that it would bounce there, at least initially. If the moving average just kind of works up a little bit and the market goes sideways here, it's going to be less important. It's more important when there's that quick sell-off, and that's when then buyers look, they're trying to figure out where to step in, and one great level is that 200 moving average. And I always like just looking back at the chart and seeing how the moving average is affecting the price. I always love looking at these little bounces that it has. Your market's way up here, and then it pulls back, a little bounce there, and you can get real into the details. You can look at all the little tests that it has here of the moving average. Breaks through here, but pulls back, and then it acts as resistance. Pulls back, double top at the moving average. Pulls back, tries it again, stops where? At the moving average. Breaks through, pulls back. Where does it have a little bounce? At the moving average. And then fails to break through, but then does break through, and then pulls back and has a little access support here before rallying strongly up. Then sharp sell-off, it stops where? At the 200 moving average. Bounce, failed breakout, retest of support, and higher. So you can just look at it, and there are lots of opportunities with the 200 EMA. So definitely that's why I wanted to bring the video to your guys' attention. So let's look at Bitcoin. This is the Bitcoin chart. This is the video. This is what was in the thumbnail. Where we're at now, the market has broken below the 200 moving average on the daily Bitcoin. And we're really at an important juncture, because now we're at the point, are we going to be stopped at the 200 moving average, and we're going to be stopped below it and be stuck below it? Or can the market break out above this and at least briefly head higher and enter more of a trading range environment instead of a bear trend environment? So we don't know yet. We need more information. Let me zoom out a little bit. Let's look at previous times. it's touched the moving average. It's kind of the same story. Every time it touches it, acts as resistance here, resistance, resistance, resistance. Then it breaks through, acts as support, support, double bottom, and then rallies. Rallies 50% up in a couple months after basically double bottoming at the moving average. So what that tells me is, yes, I mean, the Bitcoin does respect the 200 moving average. It matters, just like on most other charts we would see. Deep pullback, failed break below 200 moving average, and then head higher, then kind of played around it a little bit here before breaking through. And after this breakout, we've not yet been able to successfully break out above it. We've been stuck below it. We're also coming up against the 20 moving average, which is less important, but it's just, it's still a piece of resistance. Looking at this, what some traders will do, they'll say bear trend, wedge top, first push, pullback, second push, pullback, third push. So wedge top at the 200 moving average, at the 20 moving average, in a bear trend. Also what could be fairly high up in a channel somewhere in here. So a lot of people got short below this bear bar, below this March 20th bear bar. And the market did go below it. So there's a lot of people that are short here on Bitcoin. And like I said, we really need more information, because this market could head straight down, or it could come up and break through this and head higher, or it could come up, stop out the bears that put their stop here, and then head lower. So we really just need a few more days of information before I would really be willing to get in on one side or the other. So I think that it's a really important juncture. This is something to watch out for. And as far as the people that did sell here, I think that's an okay short. What you want to be doing is at least 2 times your risk. So here's what 2 times risk would look like off of this. And I would even probably try to go for more, like 3 times your risk. Going for 3 times, you're getting out around 70,000. That's a good, round number that would act as support. You're getting around the low of this bull rally. So there's going to be people interested in trying to find support around the start of this bull rally, which is also around 70,000. So I would try to go for a little bit more. So that's going to help out your win-loss ratio from going for more there. All right, so now this is the Bitcoin weekly chart, and we can see we're below the 20 moving average, and the 200 is below. Once again, look at the 200, how it acts as support here, acts as support here. And what I was talking about, if there's a sharp sell-off, then that moving average has an increased chance of acting as support. So if we do have a sharp sell-off down to around the 62,000 where this EMA is, then I could definitely see buyers there. And for a while now, for at least a few weeks, my area to be buying Bitcoin is around 60,000, 65,000. So I already do have some Bitcoin, and I would think about adding on at the 200 moving average. So so that is my plan, what I'll be doing with that. And I think it'll be good to give it a little bit of room to pull back, and then the first entry would be in the 60,000 to 65,000 area. From there, what price would it go to? Would it keep on going down to 40,000 or something lower? I don't know, but I think this 60,000 area would be a reasonable place to start buying. Not only because of the 200 moving average, but also we can see this level has acted as support and resistance before. Resistance breaks out, comes down, and we basically have this triple bottom. at this level. So plenty of reason to be buying around 65,000, 55,000, kind of in that area. So yeah, that would be where I would be adding on to Bitcoin. So that's all the charts I wanted to show. The 200 moving average, I mean, clearly it's a respected type of support and resistance. And if you want evidence for if it's respected, just look at the charts. I mean, pull up any chart, pull up any stock chart, any commodity, any, and, just pull up anything, and you can see how often it gets tested, and the market, reverses on a dime at that level. Of course, it's not always. So you need more than just that 200 moving average to craft some strategy off of to create some edge. You need more than just one indicator. But it's a very respected level. Everyone looks at it. So you're, by being aware and having this on your chart, you kind of have your thumb on the pulse of the market a little bit more, and it's always been really helpful to me. So thank you guys for watching. If you have questions on the 200 moving average, let me know in the comments. I'd be happy to check it out. Maybe if you want me to review another chart, I'd be happy to do that as well. So just let me know. See you guys.